Can you just sort of remind everyone of your track record? Because again, when we spoke last time, you talked about three previous successes, and I think that might put into the spotlight your ability to actually assess a plan which is going to work for you now.
So look, I think that's an important point because quite a few members of the current management team have been with me for almost like 10, 12 years now. So they have participated in some of these successes. So it's the same basically management team that is going from one company to another, basically starting, then exiting, and then going into another one. So the business model that we've always employed is pretty straightforward. We want to find a project that has the potential to become a world-class project. And then we throw basically everything we got into it. In other words, we do not do multiple projects. We focus on one project at a time. And we take it from A to Z until it's ready to go into production, or we position it for potential M&A transaction. We've done quite a few things in the past. Maybe I'll just dwell on the ones that we've done in the public domain, because we've done obviously quite a few projects privately as well. But the most recent project was a potash project in Africa. It was a company called Allana Potash. It was a Canadian listed company, and we took it literally from scratch to the point where it was ready to go into production. We got all the permits in place, feasibility was completed, EIR was approved. Basically, very we've been doing with Millennial so far. And then we got an offer from a large potash company out of Israel called Israel Chemicals, and we ended up selling it to them for $170 million. Just to give you an example, we started that company with $3 million, ended up selling for $170. Before then, I was a co-founder of another potash company. That was in a different part of the world. It was in Saskatchewan, Canada. The exact same thing, Matt. We started from scratch. We drilled it out. We confirmed the resource. Finished the feasibility study, got the permits in place, and then we got an offer from a large German potash producer called K+S, or Kailun Salts, and they bought it from this company called Potash One for $434 million. Before then, I was involved with a uranium company. That was a big success. I was in the management team. Again, we took it from $30 million company to $1.8 billion exit. It was called Energy Metals, dual listed in New York and in Toronto. Again, if you look at all of these projects, Matt, not only is the business model similar, but also the technical approach is quite similar, meaning that on the uranium side, we focus on in situ leach. In other words, this is basically leaching, the pumping water, solution into uranium ore and dissolving and pumping up to the surface. With potash, with both projects, it was solution mining. Again, exact same thing, pumping water into the ore body, dissolving potash, pumping it up to the surface, and then processing. In case of the most recent potash project, we also used evaporation ponds, because in that part of Ethiopia, we had the climatic conditions that were favorable to the use of evaporation ponds. So exact same thing here. Now, the reason we chose those projects or that type of deposit or that type of processing was very simple. We always look at the cost structure. We always look at the situation where the project is low cost, so that it can actually survive when the prices are not obviously in your favor. There's no way for us to predict the pricing, where there's no way for us to control it. We know that we have very short, I would say 2 to 5 years of a window within which you can develop these projects. So if your project cannot weather the storm within that period of time, we do not want to touch it. And that was exactly the thinking behind getting involved with Millennial, because we said, look, there are tons of projects in the world, especially at and we're talking about 2016, everyone is chasing a lithium project, but we wanted to focus on brine at the end. We wanted to focus on the project that can survive if the lofty lithium price starts declining, which was the case in the last, it's been declining for almost 18 months now. But despite that, the projects like ours can survive that type of environment, because the operating costs are low enough to actually attract investment, and then of course build it and produce at attractive margins as well.
There's no time like now where that model stands out as smart, because in bull markets, a lot of companies can survive. They can get by. They'll make enough money they can be promoted. We're looking at uranium companies at the moment, and the price recovery there is going to take a little bit longer, but the companies with the low cost profiles are the ones that people should be looking at, because it allows their fundamentals to actually be more robust. And as you say, if things do get difficult, they'll be there long after the rest have gone. So no, I mean, obviously I like that as a model, but it's been a tricky time for you guys, because the lithium market has had a tough time for the last 3 years. I keep saying it, but it's only because I want to get into talking about how you take this business plan and position yourself in the market within these battery mineral ecosystems in Europe, US, China. These are long supply chains that are being built with billions and billions of dollars. How are you going to hope to insert yourself into one of those supply chains to allow you to have sensible conversations around your financing? Because the cost of the financing can dramatically change your fortunes. So what are the conversations that are happening at the moment? Because you're talking about putting yourself in a position to have those conversations, but where are you today?
So look, I mean, the category of companies or strategics who have been talking to us in the last 2 or 3 years has evolved as well. So in other words, two angles here, or two groups of silos that we're talking to. One is the folks who are interested in the project. In other words, either they want to be a large investor, or they want to actually participate in the project, meaning they want to be part of, become producers themselves. And then there's an offtake angle to this, Matt, as well. And on the offtake side, we also look into parties who can not only just do a deal with us, so to speak, but who can also bring financing to the table. And that's very important. There's some European parties, some American different large American organizations we're talking to. Some of them can actually come in with direct investment in the project or the company. Others can bring their own kind of the country's Exim banking investments or debt investments as well. So we think it will be a combination of that. Obviously, if there's an M&A transaction, that's a completely separate situation. But I'm talking about if we proceed with construction, with funding and construction on our own, then we will probably put together this type of a group that will help us fund this and then take it to the next step. Now, obviously, we're not doing this by ourselves. We engaged Credit Suisse almost 12 months ago now to help us with this. Their London and Toronto offices are helping us. So it is very important because they have global reach, global network, and thanks to that, we could actually get in touch with all these groups that are quite interested in our project.
So I get that those ecosystems, those tens of hundreds of billions of dollars of ecosystems are very interested in getting their supply chains sorted out. And we haven't touched upon players like Orocobre and other big maybe not currently, but have been up until now big producers in the lithium space, able to turn the tap back on and turn the volume of supply into the market, and that may affect pricing, etc. And perhaps there's a conversation for another day. I wouldn't mind getting your input on that one, but I want to understand why the confidence that has been shown in you by these big groups as a significant near-term low-cost producer, why that confidence hasn't translated into the marketplace. Are your shareholders or people looking at lithium investment at the moment, because it's a bit of a dirty word in Australia, it's not getting too many people excited because they have a view that lithium price is not going to do anything anytime soon. But for retail investors, family offices, high net worths, who are either invested in you or looking to invest in you, how do they get comfort? What should they be looking to get out of this, long walk towards production? What's the upside for them?
Yeah, look, I mean, two things, confidence in the project, and the ability of the project actually to either get to production and obviously start generating revenues and profits, and hence build tremendous value into the stock, or a potential M&A on the way there. So the way we look at it is very simple, is basically the joint venture or strategic partnership with a strong party be it as a party that will finance this or a party that will both finance and help technically, will actually remove a lot of risks for this project. One, obviously, the financing risk, and the second thing is, of course, technical risk. And I think that will really set us apart from other peers who will not be able to show either. Now, to give you a specific example, Matt, one of the projects that we've done, one of the companies that we've built in the past, we actually brought in a strategic who gave us an offtake, take or pay type of an offtake, invested up to about 20% of the stock. And within about a year, they bought the rest of the company out at 50% premium. So this is the way we see things developing from now. And I think now with kind of getting whacked by both the virus situation and, of course, the lithium decline, the lithium price decline, this may be a good opportunity for both our current investors and, of course, the new shareholders to get involved with the company.